what's going on, everybody? Hey, welcome back to another trading video lesson. Now, this video lesson is going to be a little bit different than my last couple lessons. I did a class on my Options Elite University, not this past Monday, but the previous Monday. And when I was going back through the video, I decided that, you know what? Because this is so valuable, in my opinion, I wanted to share it with everybody, okay? I talk about the squeeze quite a bit, but more importantly, I talk about market posture, how we can use our market posture to gain an advantage while trading the squeeze, okay? You do not want to miss this class, okay? I charge a lot of money for this class, but I decided to share it with everybody completely for free. So if that sounds good, here's what you got to do. 1, subscribe to the channel if you haven't done so yet. 2, hit that little bell to be notified whenever I shoot a brand new video. 3, like this video, right? If you like it, like it. And 4, make a nice comment, okay? It doesn't cost you a thing, and it really helps support the channel. All right, everybody, so sit back, grab some popcorn, and watch my Options Elite class that I did 2 Mondays ago. And stick around to the end of this video where I'm going to share with you a super incredible bonus that I put together. All right. Yeah, it's just setting up, my man. It's setting up. So the S&P 500. Now, I really want to talk more about market posture because let me tell you something. This saved my butt last week. Remember, let's go back in time. And again, this is so important to me. When I was learning how to trade, and even 5 years into trading, I really sucked. I sucked for a couple reasons. One, my money management was bad. I traded the P&L, which was bad. But another thing was I was not aligning my strategies with market posture. It's so critical. I am going to hammer this every damn day. Okay, every day. Because my mentor hammered it every day and I didn't pay attention until I finally one day woke up. And that was many years later after 2 blown up accounts. Granted, Walter Energy was one of the reasons why I blew up my account, which was just a stupid move. Okay, but aligning the strategy. Last week, before the power went out, we were in this stage right here. I said that number 1 is we need to establish market posture, which, by the way, I put a lot of market posture videos inside the membership area. But we also said, where is the S&P 500 at in relationship to its trend? Is it near support or is it near resistance? We said that. I made it very clear that because it was approaching, it was at resistance, not approaching, it was at resistance. I said, I'm not going to trade any bullish trade. I said that. I'm going to just let play out what I have played out. Then I'm going to go look for bearish trades in bearish sectors with good setups. We placed a trade on BLL. Then my power went out the next couple of days, so I couldn't place any more trades. But I'll tell you this. I didn't place any bullish trades either. Now, even if my power was out, I still would not have placed the bullish trades. Why? Because that's what I used to do. I would put on bullish trades when the market was at support. The market would bounce, my portfolio would go up. But then I would keep putting on bullish trades. And then the market would roll over, and all of these last trades that I put on, I would lose pretty much all of them. So my account that went up would basically be flat or down a little because I was loading the boat up here. And when it finally dawned on me after my damn mentor would tell me over and over and over again, he said, Jeff, go back and look at your portfolio. When does your portfolio do the best? And it was like, well, it always did the best right as the market bounced and followed through. When the market bounced and followed through, my portfolio always went up. And where it did the worst was when I kept loading the boat and the market reversed. Now, hear me out. We have no idea when the market's going to roll over or go up. But what we do is we play the probabilities. When the market's at support, we look for bullish trades. Bottom line. Now, if the market bounces and rolls over, we're going to probably get stopped out and lose. But if the trend continues with the market, like the trend is our friend until it ends, right? The trend is our friend until it ends. It has to be right because it rhymes. If it bounces, we're going to win. How many people made money here? Tons. I don't know who lost money last week, but my account went up last week. 62,700. It was just at 60,000 the other day. We all know that because it took me a while to climb up there. I made over $2,000 last week. And I couldn't even trade, but it was good because the only trades I would have did would have the downside. I probably would have made more money. Here, I mean, this is so important. So let's look at the market now. And thank you so much, guys, for allowing me to go over this. Because it's not just about trade. I got filled already 2 trades a day, which I'm going to go over. No, my oil, I'm not even in oil trades anymore, Jason. Look, I'm out of these oil trades. I'm done with them. I closed them like a week and a half ago. I'm done. Thank God all my oil trades are out. I was living with those bad boys for a long time. So the only thing I have is some lottery, but these don't do nothing. I'm actually down today. That's the only reason I'm even down today is that because I have a little bit of crypto left. But I have no more oil trades. None. I made money on my regular trades. But I closed them. I hit some targets too. I don't even know all the targets I hit because, again, I couldn't even look at my power. But no, I have no oil trades. They're gone. So here's the deal. Let's go over market posture. Long-term posture's up. I'm not going to go through that again because we already know that. Intermediate posture. Now, we want to make sure we've got a good, clean set of rules because now's the time to start looking for bullish trades. Now is the time. So, intermediate trend is up, bullish. That means the majority of our portfolio needs to be slanted to the upside. Now, I'm not talking about day trading, okay? Forget day trading, completely separate. I'm talking about for those of you who are trading like 195-minute charts, daily charts, bigger time frames. So the intermediate trend is up. Cool. So somebody tell me, based on our guidelines, what is the short-term posture? I'm going to go over it, but I want somebody to type in the chat, what is our short-term posture right now? And I'm going to give you some serious guidelines because I've been thinking about this and thinking about this and thinking about this and thinking about this. Short-term posture right now. I'll give you a hint. It hasn't changed. Can y'all hear me? Somebody want to take a stab at it? What's our short-term posture? Testing, 1, 2, 3. Testing. Anybody hear me? Thanks, Rafa. And I'm going to go over this. And I mean, if y'all don't answer it, I'm telling you right now, this is everything. 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 You want to consistently grow your portfolio week in and week out, this is the ticket. And again, I am not talking about day trading. For those of you who want to trade bigger time frames like me, you will not grow your portfolio consistently without understanding this concept. I'm sorry. You're just not going to do it. And I know because I couldn't do it either. Short-term posture, neutral to bullish. Thanks, Kirk. Why? We had a high. We had a low. We had a lower low and a higher high. You know, whenever we went to this lower low, we were neutral to bearish. It broke back up above the 34. That put us into neutral. When it broke the high, we're bullish, but we're still neutral. Okay? So until we pull back and bounce, I'm neutral to bullish. That does matter. I'm going to tell you why it matters in a minute. Neutral to bullish. Once it pulls back and bounces, as long as this high, question mark, stays above that high, we're going to be full on short-term bullish. Now, a 3-day trend, if you want to look at the 3-day trend, the momentum's down. Okay, so 3-day, like the short-term micro trend is down. That's fine. But my short-term trend, 2 days to 4 weeks, in my definition, is neutral to bullish. Until we get a confirmed higher low, this is short-term neutral to bullish. Yes. And the only reason, Rafa, is because of this damn low right here. Well, let me repeat. Yeah, because once my posture goes from bullish to neutral, I'm not as quick to shift out of neutral. And because this went to neutral, the only way I can get out of neutral is it breaks to the upside or the downside, but then I'm neutral to whatever. If it breaks to the downside, yeah, no problem. If it breaks to the downside, I'm neutral to bearish. If it breaks to the upside, I'm neutral to bullish. If it breaks to the downside and hooks back up and forms a lower high, I'm bearish. If it pulls back and forms a higher low, I'm bullish. And why the heck does this matter? I'm going to tell you. It's like that movie, right? I'm about to tell you. I can't remember. What does this have to do with me? I'm about to tell you. Okay? That's the Count of Monte Cristo, Jason. You should know that one. So, once it pulls back, and then Rafa's question, can you go over what makes a confirmed higher low? A close above the high of the low day or any inside / following day. Boom, 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 boom. Close above the high of the low day or any inside follow. It's the bounce. Right now, look, did we have an inside day? We sure did. I was bullish to neutral. If we would have bounced today up here and it closed above the high, I would have shifted to short-term bullish. But we gapped down. The momentum is going down. What will constitute a confirmed low based on my guidelines that I learned from Dave Johnson and Scott Thompson and all the other mentors of Invest Tools? A close above the high of the low day. So today's the low day. We're not going to shift our posture today. It's the low day. Tomorrow, if we bounce, it will be bullish. If we go down, I will be short-term neutral. If we go down, I'll be short-term neutral. If we bounce, I'll be bullish. As long as this low is higher than that low. Now, Jeff, that's all great, but why the hell does that matter? Here we go. This is, remember, it goes back to several things. This is going to dictate the strategies and how I trade. When I'm neutral to bullish, if I'm going to buy a call I'm going to be a swing trader. I'm going to buy at support and I'm going to sell at resistance. I prefer not to buy calls. I would rather do a debit vertical spread if I'm going to be a buyer when my posture's got some form of neutral in it. For those of you that trade credit spreads, which is I've got my hand raised. I got filled on 2 trades today. How are we going to play this? Here's how we're going to play it. If you take a credit spread, 50% within 5 days, that's the rule no matter what. If we get 50% credit within 5 days, out of here. Out of here. That stays the same. When I'm neutral, neutral posture, or even bearish, because just because I might be bearish doesn't mean that I'm not going to trade a bullish trade. So let's say that this trade's bullish, but our posture, let's just keep it neutral, just for easy purposes. When we're neutral, or some form of neutral in it, like now, neutral to bullish, neutral to bullish, neutral to bullish, some form of neutral, my rule is going to be 50%. Okay, if it's just neutral, hang on, hear me out. If it's just neutral, I'm going to get out of 50% no matter what. When it's just neutral, I will put a target at 50% and I'll get out of 50%. When it's neutral. When it's neutral to bullish, like right now, as long as it stays neutral to bullish, here's the way I'm going to play it. 50% within 5 days, get out. After 5 days, 50% sell half. Let the other half go to 80%. I'll repeat. Neutral to bullish, like right now. 50% within 5 days. I'm going to sell half. If past 5 days, I'm going to sell half at 50% and the other half at 80%. If we're bullish, short-term posture's bullish, and I trade a long call, I'm going to trade it to full price targets. 127 extensions, 161 extensions, depending on the strategy. I am bullish, so I have no problem forcing the stock to make a higher high. When I'm bullish and I'm taking a spread, I'm going to get out at 50% within 5 days. After 5 days, I'm going to stick to the original rules, 80%. Game over. That's it. That is the rules that I will live and I will die by. Also, and I'll get your question here in a second, Glenn. Also, when the market is at resistance, think about it. When the market is at resistance and it rolls over, we're going to focus on weak stocks in weak sectors, like we did with BLL, which is up 28%. Again, I'm losing because I'm still stuck with this crypto. That's fine. I mean, I don't care. I mean, we're good. I mean, this is, again, I don't care about what happens, you know, my profit and loss. I don't care about that. I used to care about that. It doesn't mean nothing to me now. I mean, I share with you guys because, you know, after the week, you know, what happens day to day doesn't matter, but we're up. All the rest, we have bullish trades, and we're down today, which is what we should be. But that's fine. Amazon, well, I already took, I'll show you that, 25 days. 3M, which we got filled today, 25 days. 25 days. 25 days. We do nothing. Tesla, 25 days. 25 days. But neutral to bullish, we're in a bearish. What do you think I'm going to do? I'm going to get out of 50%. Order to get out of 50%. Take my money and run. Okay. Now, where are we at now? We're at support. It's different than it was last week. Now we're at support. Now, the market hasn't bounced yet, but we're at support. The market is pulling back. So what do you think the majority of the stocks are doing right now? If the market is pulling back into a bull flag, what do you think the majority of the stocks are doing right now? And I'll answer that in a second. If the stock market, ES, is pulling back into a bull flag, what are the majority of the stocks doing? This is so important. God, I'm gonna keep this. I'm gonna fucking hammer this. Forgive my language, guys, but I'm sure y'all understand it. I just get pumped. This is a teaching class and a trading class, so I'm not going to answer this question. I'm going to wait for somebody to type in. When the market is pulling back into a bull flag, what are the majority doing? Glenn says the majority are pulling back. This is so important. I did not pay attention to this, and that's why I didn't make money. Now I make money all the time. If I can make money anytime I want to make money. Because I understand it in the market. Because I understand what the hell I'm talking about right now. And I dismissed it for so long, but I'm not going to dismiss it. I'm not going to do that to you guys. I will not dismiss this for you. Because a lot of you might be dismissing this the way that I was dismissing it, and I'm not going to let you. I'm not going to let you. The majority of the stocks are pulling back into bull flags as well. What is a great strategy to trade right now when the market is pulling back into a bull flag? We have a couple things. The market hasn't bounced. The market hasn't bounced, so we'll probably have bull flags. But guess what? Guess what? And I'm going to get all of your questions and all your comments. What does that look like? The market is pulling back. Look at Microsoft. What's it doing? Pulling back, green to black. If the market is pulling back, it's not a green to black, but it's pulling back into a flag. Isn't that a good time to catch these stocks that are pulling back into green to blacks? Yeah, I think so. I've took 2 trades today, green to black. Market's pulling back. Now's the time to look for green to blacks. Bull flags. It's another one. There's a flag, but again, depending on how you trade it. Right, this is a green to black. I've already looked at this one, SRM, but the option spreads suck. Now, let's go deeper. When the market's pulling back, the coincidence stocks, which are the ones that are matching the market, are pulling back. But somebody, Alex, you hit this right on the head. When the market is pulling back, the coincidence stocks are pulling back. What are the leading stocks doing? The leading stocks probably already bounced. And they're doing what? The leading stocks probably have already bounced and are nearing breakouts. So let's think about this. If I'm going to trade a breakout trade, now's the time to look for breakout trades. Because the leading stocks have probably already pulled back and are already bouncing. Which means high, short interest breakouts. Now's the time. So Glenn said, given the posture is neutral to bullish and then confirm the higher low and as a bullish transition, which is better to do? Put credit spread, call debit spread. There is no better one to do. It's whatever fits your lifestyle more. Me personally, a put credit spread, probability trade, neutral to bull, they're both going to work well. There's really no better. It's more comes down to your management, honestly. The put credit spread, the management is very simple. The debit spread's a little bit more aggressive on the management because you're buying. You would want to treat it the same way as a call. If it breaks support, or again, you could do some multi-leg thing. There's no better strategy. It's just really, you know, what fits your lifestyle more. Think about it. A debit vertical spread, right now the momentum is pulling back. In order to trade a debit vertical spread, I trade it like a call option. I want to see a confirmed shift in the momentum. With a put credit spread, I prefer it going down. I prefer it going down. So there's really no right or wrong answer. I mean, I like debit spreads. I mean, I'm falling in love again with credit spreads because they're so damn easy. And they're easy because the management is easy. It is what it is. I love debit vertical spread. So if my posture is neutral to bullish, I would rather trade a debit spread than a call option, but I still want to trade when the momentum shifts. That's just me. Some traders, they don't do that. They pick levels. They'll put limit orders and catch it when it's falling. I did that. I don't like it. That's not for me. So hopefully that helps there. ARVN. This is so important because I want to trade now. Now's the time to look for bullish trades. If somebody's got a high short interest stock that's approaching resistance, let me know. I have no problem putting on a bullish breakout trade. High short interest, preferably 20 or higher. That way when it breaks out, it rocket ships to the moon. ARVN. Okay. Oh, man. What do you see here? Let's see here. Let's go. Let me ring through my checklist, my brain. I can't trade a green to black because I'm only going with 2. Once it gets beyond 2, I wait. My next line of attack is a 5-dot squeeze. Now, the blue is above the pink, but price action is below the pink. My rule with the 5-dot squeeze is I want to see the price action basically right at or above, close to the 30. It's broken the 30, so I'm not going to trade bullishly. I would now, but again, even bearishly, this is a very interesting one because, okay, cool, thanks, but it's not my thing. I would prefer to do this and then catch it bearishly, right? A descending triangle or a symmetrical triangle to the downside. This is kind of, you have a high, you have a low, you have a lower high. This is kind of neutral. Let it come back up here, maybe do this, get back above, and then trade it. Right now, you're in no man's land. I can't trade this because I don't know how to trade it. It's not one of my setups. It's not a green to black. It's not a 5-dot squeeze. It's not a bear flag. It's not a bull flag. I can't trade it. I don't know how to trade it. I know how to trade it, but you know what I mean? Like, it's not my setup. So, it's a tough one. If you're going to trade it, just make sure you know what strategy you're going to trade because I don't know. Now, some traders that just trade probability, they don't really give a damn. They're like, oh, let me go put on a probability trade. And that's fine. You can do that too, and you'll probably win 60 to 70% of the time. Just go. But again, I got to have something in my brain that keeps me organized on my rules. So thanks for sharing that. AWH. High short. Whoa. Okay, cool. High short interest. Now, here's the thing. High short interest. This is a beautiful, almost beautiful 5-dot squeeze with earnings. But here's the deal, though. Yes, it is a breakout. But look, that's the breakout high up here. Yeah, you can go ahead and put on an order, but you're not going to get filled for a long time. We're looking for that stock that's kind of up here close to the resistance. This is not here. Now, what can you do? Guys, this is a squeeze. This is a squeeze. Earnings is... When is earnings? Earnings is in a month. A month. Oh, no shit. Dude, I keep forgetting that's there. Red means it's... What does that mean again? Because it's... Oh, but that doesn't take into consideration the weekends, right? It says it's red.
Yes, red means you're good to trade, but you see in the big label, it's green. You see the G?
Oh, yeah. Oh, shit. So this is telling you that, oh, yeah, you're right. So it's past 31. It's G, meaning it's good. It's greater than 30 days. Oh, okay. And then this one, the red, what is the red?
This means also is good.
Okay, the red means it's good. Okay.
Yes, but I'd rather use the new label than the small one.
This one right here.
Yes, because it's part of the strategy.
Gotcha.
So
Gotcha. So green means it's past 31 days. Perfect. Okay. Thanks, brother. Yeah, I didn't even look at that. So, okay, so let's go back. So number one, high short interest. This stock is not leading, by the way. It's not leading the market because the market's pulling back. This stock is pulling back. It's not leading. But if you're going to do a breakout, you got to do a breakout when it trades above the high. So it's too far. Like, now, what else could you trade though? This is a squeeze. Now it's 3 dots. If you get another dot and a confirmed bounce, this would be a really good squeeze trade. It would be actually a 5-dot squeeze. Well, 5-dot squeeze. Right now, the momentum is down. But you know what I mean. For those of you that trade a squeeze, this is a good looking one. Just let the momentum shift, and then you can trade a call option or a debit vertical spread, depending on what you like. But like, there's no setup for me yet. But it's starting to cook. Starting to cook. HSI. Right? Or did I do it right? HSI or HIS?
no, Jeff. HSI means high short interest.
Oh, I'm like, what? Okay, my bad. I got you. Thanks. All these little terminologies. So I like it, but I'm gonna go try to see if I can find one better. I got this list right here. High short interest. KNDI. Well, let's go. Let me get you other ones first. Okay. BKE. Buckle up. Ooh, nice. So earnings, 18 days. Yeah, that's perfect. 18 days. That's tough. That's a tough one. Because again, if you do a breakout, oh, it's a green to black. Wow. But it's red because it's within the 30 days of earnings. It's a good one, but earnings is too close for a vertical spread. If you're going to do a debit vertical spread, Glenn, or anybody else, I would personally wait for some type of momentum to shift. If you're going to do a breakout, you can't do a breakout until it penetrates the high, so you still got a ways to go. I wouldn't go ahead and put an order in yet. That's a little bit too late. So this is a beautiful green to black, but it's red because earnings is too close. Debit vertical spread, wait for the momentum to shift. Breakout, well, you got a long ways to go. We need to see something that is, damn, look at that. Like at its high. At its high. None of these. Look, none of these. What's this? None. 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 That's not doing much of anything. Chewy? Nothing. Remember, we want to see something that's already done a flag, that's already kind of up here, approaching resistance. Because if the market bounces, that's going to shoot up, and that's going to be a huge moneymaker. And if it has high short interest, you're going to rake. You're going to rake. Okay? You're going to rake. A, B, B, V. You know, this looks very interesting. This looks very interesting. Man, this is throwing me off. Damn. Let's analyze it. Okay. What's the stock market doing? The S&P 500 is at support. At support. So, if the S&P 500 bounces, then our bearish trades are probably going to bounce too, right? That's going to be those bull flag hookups. Again, I prefer to trade bearish trades when the market is at resistance. Right now, it's at support. So this is very interesting to me. If I'm going to trade, it's definitely going to be a spread trade because the market's at support. Again, if flip-flop your brain for a minute. When the market's at support, we're looking for bullish trades. When a market is at resistance, we're looking for bearish trades. The market's at support. So if I'm going to trade something bearish, it better be in a weak-ass sector, no matter what, okay? It has to be. So ABBV, let me go get this right here. Let me pull up FinViz. I'm just trying to analyze this so y'all can, you can analyze your stuff and just you kind of see how I'm looking at it. ABBV, okay. It's in the drug healthcare. XLV is healthcare. So let's go look at XLV. Okay. XLV. XLV is breaking support. Okay. So that's bearish. It's leading the market to the downside. Okay. The blue is crossing the pink. So that's good. We're in a bearish sector. Now, it's obviously it's neutral to bearish, but you get it. It's lagging the market. Okay, cool. So that's positive. If I'm going to trade, I need that sector to be right now. Couple things. Here's what you want to do is you want to trade bearish stocks in bearish sectors. Okay, and again, RAF, I'm going to go really deep on this, and you guys don't have to analyze it the way I do. But again, I'm trading my own money. I'm managing my own money. So I have to be very picky. I can't afford to just throw my money. I can't afford to do that. So let's think about this. ABBV is in the healthcare sector. Is it a strong stock in a weak sector? Or is it, okay, is it stronger than the sector or weaker than the sector? Let me repeat. This is very important. ABBV. It's in, wait, was it in the, healthcare, XLV, I'm sorry. Did I do XLU a minute ago? Hang on. Let me just, it's XLV. Okay, cool, yeah. So look at XLV. Look at XLV. Get that mental picture. ABBV. Is ABBV stronger than the sector ETF? Coincident or weaker? This is the question you always want to ask yourself. Remember, the market's at support. If you're going to trade bearish, you need to be dang sure. So somebody type in or a question mark that you don't know, because maybe I'm not explaining it good enough. Is ABBV weaker, stronger, or the same, coincident, as XLV? Somebody type in a chat. Or question mark. And again, you don't have to do your analysis this way. Kirk says stronger. Ash says question mark. Again, you do not have to do your analysis this way. It's your money. You do what you want. I'm just telling you that this is the way I'm going to do it. Because at the end of the day, what matters, I mean, to you more? What I do or what you do? It's what you do. All right, but I want you guys to analyze this. So it's stronger. ABBV is stronger than XLV. Why? Well, I'll tell you why. Here is the low. Right there. This hasn't even broke the low yet. Look at XLV. XLV is breaking the low today. ABBV is up here. It's a stronger stock in a weaker sector. I'm not going to trade the stronger, the best of the weakest. I'm going to go focus on the weakest of the weakest. Which means, if I'm going to trade bearish, I'm going to go to XLV and I'm going to look for at least coincidence stocks or nothing. Because I would rather focus on bullish trades right now because I already have a bearish trade. I would have had more bearish trades if my power had not went out. I can promise you that. Weak stocks and weak sectors, leading. At support, if this, no setup though, down, that's a lagger, Merck. If Merck was a black squeeze, Rafa, if Merck was a green to black on the downside, obviously earnings, let's just forget earnings, that's a dividend. If Merck was a green to black, I would trade this to the downside. Why? Because it's a weak stock in the weak sector. It's strong. It's weaker than the sector. I want dogs. Complete dogs. Especially if the market is at support. Dog. No. At support. At support. It's stronger. Stronger. TMO. Weaker. It is weaker. No setup. But guess what? This is something to watch. This has already broke support. It's tanking. There's just no setup yet. Great call. I hope this is helping what I'm talking about. This is so important. Align your strategy with what is going on in the market, and you're automatically going to be 60 to 70% better than everybody else in the trading world. I promise you that. Your account will look different. So much different. So much more consistent. If you take this opinion. Now, we're not talking about day trading. Completely different game. Charles has got the ES mastered. Focus on the ES hardcore. Hopefully, Charles, this week you can do some classes or at least one class on the credit spreads with the SPX if you're available, because I know everybody, including myself, wants to be a part of that. Hey, thanks, Glenn. And again, you guys know me. I dismissed this crap for so long. I'll tell you straight up, I'm not afraid to tell you how bad I sucked. I'm not afraid to tell you that I'm still nowhere near the best trader in the world. But guess what? I'm making money, so I'm okay. I'm still in the game after 14 years. Am I the best? Hell no. Because the best to me is just a product of really people putting on more risk. You know, I do what I do, man. I'm risking $1,800 on my green to blacks. Today, I put at risk $3,600. Okay. Right? Yeah. I'm cool with that. Exactly. That's Forrest Gump, right? That's Forrest Gump. Anybody got, let's go look at some. I can look at some 5-dot squeezes to the upside also. Because check this out. Ooh, that's a good one, but earnings. Because remember, markets at support. Markets at support. Markets at support. Uptrend, 5-dot squeeze. Can we get down here? Mattel? I bet the options suck. Yeah, the options are a joke. We're also at a tough spot, guys, just so you know, on vertical spreads because it's that 50 days. I mean, I like when this is in the 40s. So it's a tough one. That's why I took 2 trades today with 25 days because we're falling in that little tough range for credit spreads. But this is a good pool, but this option suck. Cliff, earnings. Anybody got any good one? Like, boom. I really don't have much. What's going on with the sectors here? Who's leading today? This is another thing you can do, guys. You just go to your sector ETFs. Look at that. Energy. Maybe I shouldn't have got rid of my damn energy trades. Energy is powerful. Look at that. Energy's breaking out. Okay. Energy's leading the market. Well, obviously energy, because energy's already bounced. Okay. Energy pull back and bounce. It's leading the market. So go find some good stocks in energy sector. I've already got rid of them. IYT already breaking out. So what you could do is you can go to IYT, okay, and look for uptrending stocks, right? Uptrending stocks with the good setups. Downtrending stock, uptrending stock, 3-dot squeeze, earnings, okay. Ooh, look at that one. Dividend on 3.5. Bouncing. This was your winner, man. Look at this. This one was great. 5-dot squeeze. If you're going to do a vertical, though, you got to get way down here, so we're probably not going to get it. But look at this, guys. I mean, but the thing is, you're understanding. We're not going to trade this. We're not going to trade FDX. We're not going to do it. Why? Why are we not going to trade FDX? Because it's weak. It's a weak stock in a strong sector. Why the hell are we going to do that? You know, over the last several weeks, I've been focusing on this concept a lot more. And it's my fault that I didn't focus on it as much in the beginning. But I can promise you this. This is the main focus. Having good strategies, aligning strategies with market condition and market posture. We're not trading FDX because it's a strong sector and this is a weak stock. It's lagging the sector. It hasn't even broke out yet. Why am I going to trade this chump when it's already breaking out? FDX is a chump. I'm going to trade in SX. This would have been a high short interest. I doubt it has high short interest, obviously. But look, it's firing today. You can ride the momentum trade if you had a trade. Some traders wait till the squeeze fires. Guess what? This is leading the stock market. What do you mean it's leading the stock market? The stock market hasn't even bounced. This is already broken out. Focus on the IYT sector. It's the stronger of the sectors. Already broke out, pulled back. Look, this is my point. It's already bounced. It's approaching another breakout. It's leading. UAL. Oh my God, it's really leading. Now, it hasn't led in the long run, but it's as of late. Look at it. It already broke out 2 days ago. And again, you're still going to trade your setups. What I'm trying to really drive home, and somebody tell me in the chat if this is making sense, if this is helping, helps me. I put on 2 bullish trades today. I would like to put on another green to black or a high short interest at or near the 52-week high. The market is pulling back. Beautiful time to do green to blacks and 5-dot squeezes. Also beautiful time to find high short interest stocks like IYT, but it doesn't have high short interest. But look how it's leading. Look how it's leading. Look how it's leading. It's so easy. So easy. You have no idea what's going to happen to your trading when you guys do this. You know, I've been rambling for a long time. I'm hoping that this crap helps. Nobody's like, well, Glenn, I know you said it one time. Oops, what did I just do? Baba. Almost great, Rafa. What's wrong with Baba? Oh, man, it's close. It truly is close, Rafa. One, here's what you want to do. Again, I'm just giving you guys a thing. So one is Baba is in the consumer cyclical, which is XLY. XLY is fine. It's pulling back. It's a coincidence stock, so that's fine. So it's matching the market. That's cool. Baba. What's wrong with it? Oh, my God, Rafa. The reason why this sticker's red is because price action is below the 30. Now, it did hold the anchor low. It is holding the anchor low, which leads us into a dilemma. Leads us into a dilemma. We prefer it to stay above that 30, right? Definitely above the 50, preferably above the 30, but it is holding the anchor low. This is a tough one, Rafa. This is a very tough one. And when it's tough and you have limited amounts of money, go find 3M above the 30. Baba, it's a tough one. I am not going to lie. It's holding the low, which is what matters to me. It is a 5-dot squeeze. The momentum is up. That's a tough one, my man. Jason said the story on Baba is told on the 1 hour and 15 minute. Okay, I'll go look at the 1 hour. 15 minutes is a little bit too crazy for me. Whoa! Look at that one. That's looking ugly. So you know what? It's breaking the 30. Now, check this out, Rafa. If this one would have been maybe in a divergence, right? Let's say this would have been in a divergence. You know, maybe the ready aim fire was in a divergence, like here. That might have been a little different story. Jason's right. So like this case, it's pulling back. It's at the low. It's broke the 34. If this 1 hour chart was in some type of like maybe divergence or reversal or something, I'd be a little bit more excited about it. So Jason's right, yeah. But you know, it goes back to your point, right? I mean, but again, is there better charts? Well, what sector is it in? XLY? What's XLY? Right there, XLY. This is XLY. Now, earnings. Oh, look at that one. GM, right? Look at that. Wouldn't you rather trade GM? Yeah, Amazon is XLY. I would rather trade GM, Rafa. So you tell me. If you guys trade a squeeze, you're waiting for the momentum to shift. If you're trading a 5-dot squeeze, all we need is a red or orange dot. If I get a red dot tomorrow, I would rather trade GM. I would rather trade GM than BABA because it's better looking. It's cleaner. I remember when Scott Thompson told me straight up, trade. I mean, he wrote this in big ass letters, and this is a guy that's made more money than I'll probably ever make. And I'll be straight up with you. I'll probably never make $56 million trading. He had written in gigantic letters on his screen, trade clean charts. GM is clean. BABA, not the best. Target clean. Yeah, this penetrated here, but it's back above it. It's just earnings, right? We're screwed, right? Ugly. Ugly. Well, it's kind of okay, but there's no entry, no setup. I mean, earnings. Oh, that's the sector. Duh. Starbucks, ugly. Jeff, you're in Amazon. You're not doing so good. But guess what? It's a green to black, so I don't care, right? I'm losing. I have 25 days. I don't care. I'm playing probabilities. I've got support levels all over the place. It's going to hit one of these support levels and bounce. I just got to back out and follow the plan, which I'm really good at doing that. Lows. Okay. Earnings. Ugly. Nike. Ugly. Yep. Amazon. I'm in Amazon. In an XLY, I feel very confident about it because of the spread trade. If I was in a buying strategy, I'd be out of it. I'm not gonna lie. By the end of this day, I'd be out of it. But I'm in a spread trade. And that's why I like spread trades. They're just pretty easy. But this is a green to black to red. So what happens is a lot of people are getting suckered out. But this is gonna do this. This is gonna bounce. I can guarantee you it's gonna bounce. It might go down here and then bounce. I have no doubt in this trade. Any final thoughts, anybody? I think that was a fantastic way to start back off the week. I'm super happy and positive to be back. Jason said, I would look at least a moving average crossover of the 8 above the 21 on the 15 minutes. Something, right? Something. I mean, if you're skilled enough and dropping down into smaller time frames and your rules allow it, cool. Me, I can just look at the daily and kind of make my analysis and be like, no, I'm going to pass. You know? But again, you're right. Jason has a specific guideline that he wants to at least see the 8 above the 21 on the 15-minute. So, like, we're talking about BABA. And again, fantastic set of rules. So, on a 15-minute, you know, the 8 above the 21 at least, you know, we still got a ways to go. So BABA's pulling back. It's right at support. It broke the 34, but it's close. So wait for something, right? So anyway, I've got filled on 2 trades. My account is basically, look, I'm so happy with this Euro trade, this Aussie JPY trade. I'm sorry. I've got filled on Microsoft 3M. I was able to wait for 60 cents, and I got filled at 60 cents. Working orders right now. I've got a stop loss on 82.97. The JPY. I'm up 546. That's a fantastic victory. What a fantastic victory on that trade. Amazon. Oh, I have my order to get out at 50%, I think. And then this one, I'm pretty close to getting targeted out on BL. up 280 today. Everybody should be in BL with me because we took that in class before my electricity. The only thing that I regret is, had it not been for the electricity, I would have gotten more bearish trades. But now I'm shifting back to bullish because the market's at support. Now I need to be in bullish trades. Any final thoughts, anybody? You want to come off mute, chat with me, just tell me, if this was helpful, what you thought about it. I would appreciate it.
Jeff, that was great. I just had
Tony?
Yeah, how you doing? Good morning, everybody.
What's up, Tony?
Good. Not having too good of a day here, but the Q's
Damn
are down. Hey, just some thoughts on the 10-year here. What could this really spook the market? Like maybe a 10% correction? Pretty much deeper from this point. It's my only worry right now.
Yeah, because one thing too is you gotta kind of see here. Look, this low is here. This could still drop. It could still drop a long ways, but remain in its uptrend. And this move right here could be could punish some long calls. Could punish some long calls. Nobody knows. I mean, we could get an inside bar tomorrow. Could bounce. I mean, the reality is we're at the 21. I mean, look, it came to the 21, kissed it. But, I mean, even if you take a Fibonacci and you go from low to high, if it pulls back to this 61 retracement, that's a big-ass pullback. So if people are in a bunch of long calls, they can get killed. So that's where, again, I'm in how many bullish trades? 1, 2, 3, 4, 5 bullish trades, 1 bearish trade. I still got my hedge. I put this hedge on last week up here. So I'm pretty flat, like neutral wise. But yeah, Tony, it's got so many levels that it can pull back to. I mean, it can go down quite a bit. And if you're in calls, you guys are gonna get killed. But if you're in spreads, just wait them out, man. Like me, I'm cool, man. Drawdowns don't bother me anymore. They used to. That's why I sucked. But yeah, it could drop, my friend. And you're in the Qs. What are the Qs doing? Again, Qs could still drop. Take a Fibonacci from high to low. Well, it's right at, what is that? The 50? I mean, it's right at the 50. I personally think the clues. I personally think that, well, obviously, today it's down. I personally think tomorrow's going to be an inside day, and then I think it's going to bounce. The trend's up. It's good. The probability is to the upside. Probability to the market is to the upside. Probability of the Dow to the upside. Russell, guess what? Russell is a leading index. What's the Russell doing right now? The Russell already flattened out, and the Russell's bouncing today. The Russell is bouncing. What does that tell you? I'll tell you what it tells you. It tells you that the Russell's the leading sector because it's the small caps. We want to see the small caps lead. The small caps are already bouncing. It's leading. Guess what? That bodes good for the market. Okay, the market's down today. Everybody's scared. Not everybody, but people are scared. What? Market's uptrend. It might pull back a little bit more, but the Russell's telling us that, hey, guys, I'm bouncing. But again, you have to trade your rules based on whatever you're in. If you're breaking support and you're in a long call, you got to get out. If you're in a vertical spread like I am, I would play the rules anyway. But now I'm really like, oh yeah, I'm definitely not worried. I wasn't worried anyway. The Russell's bouncing. It's leading the market as it should be. It's a good sign. 𝐂𝐨𝐨𝐫𝐻. Now, the 𝐂𝐨𝐨𝐫𝐻 is way leading. But again, 𝐂𝐨𝐨𝐫𝐿, you know, it's at resistance. So I'm expecting this to, you know, pull back. So who knows? But again, there's no signs that this market is going to take a beating. If anybody on the news station or all that, it's like, oh, the market's, they're on crack. Unless they know something that the whole world doesn't know. Because what I know is we're in an uptrend. We're pulling back to support. This is a bull flag. I'm full-blown bullish mode. I'm looking for strong stocks and strong sectors. Meet my guideline. Russell 2000's leading. I'm not worried at all. All my bullish trades might be down today, but I can promise you this. If the market bounces, they're all going to be up. And I just hope that I hit 50% today on BLL so I can get the hell out. And I'm damn close. I am two cents away from hitting 50% on BLL. It's awesome. All right, everybody. I hope you enjoyed that Options Elite class. It was super exciting, and I hope you found tremendous value in it, and more importantly, helps you in your trading. Now, I told you at the end of the video I was going to share with you a bonus, right? Well, here it goes. You saw those custom columns on the left when you were watching the video. You could see the custom columns. Those are my Squeeze Pro custom columns that I had made. Now, I have another one that was just made, okay? Now, this one, oh my gosh, is going to blow your socks off. What it does is it actually notifies you when the momentum in the TTM Squeeze histogram shifts positive. But let's take it a step deeper. It's not going to start flashing unless the stock is in a squeeze. So the stock has to be in a squeeze, and then it's going to pop up and it's going to alert you whenever the momentum in the TTM Squeeze histogram increases. And for those of you who watch my videos, you follow me, you know that when you're trading the squeeze, waiting for that momentum shift, that extra confirmation can be huge. And this code tells you, okay? Also, down below, you're going to see a link to the Ready Aim Fire Pro by Simpler Trading. Now, in the description of this video, if you end up getting the Ready Aim Fire Pro through my affiliate link, then I'm going to throw in those special bonuses down below. Just go down below, you'll see the Ready Aim Fire Pro, and you'll see that if you get it through my link, the bonuses that I'm going to give you. Now, also the TTM Squeeze Pro by Simpler Trading, okay? If you decide to get the TTM Squeeze Pro and you use my affiliate link as a bonus, one, it's going to be cheaper, okay? But two, I am going to throw in some extra toss custom columns that I built. Again, look down below in the description of this video for all the bonuses. And then my Options Elite, okay? The class that you just watched. The Options Elite. If you click the link and you go to my Options Elite, then you're going to see in the month of March all of the bonuses that I'm going to be sharing with you if you get my Options Elite class. Well over $4,000 of custom scripts and columns that I had specially made. I'm going to give you those for free if you join my Options Elite class, okay? And again, as an added bonus, the one that you didn't see, the histogram shift in momentum, I'm going to give you that for free if you join my Options Elite in the month of March. All right, everybody. Until next time, Trader Jeff Moore, author of the book Trading Part-Time, CEO, lead instructor of the Trading Part-Time University, and I'll see you in the Options Elite Master Course.